Hi everyone, welcome back into XLpips YouTube channel. My name is Fabian and today's video is going to be about a simple way where we can actually execute using the concept of market structure and also liquidity. Okay, so these two are the very important things that every trader must consider when he or she is trying to find setups in the market. Okay, so they are market structure and liquidity. Okay, so we focus on these two, market structure and liquidity. Market structure and liquidity. So these two are the most important things that every trader must actually consider when he or she is trying to find setups in the market. So when it comes to market structure, when it comes to market structure, we're just focusing on how the market is moving. Okay, the price actions. So if we are bullish, we will see this kind of structures. Okay, we will see price creating what we call higher highs and higher lows, and price will keep on breaking previous higher highs and form new higher highs. Okay, so this is the higher high, and this is a higher high, this is the higher low. Okay, so it's a new higher high. Okay, and again this is the higher low. So here is that price was actually forming highs. Okay, was forming these highs. Okay, and these lows. Okay, and the price kept on breaking these previous high highs and forming this new high high. So we were actually seeing price showing the strength of buyers, like the movement that is pushing to the upside is the one that keeps on breaking structure. So it means there is a strength, it is strong. Okay, that's why price keeps on breaking from these high lows to formation of the new high highs. Okay, so that's what is actually happening when we are in a bullish market. That's market structure when we are bullish. Okay, so we have these break of structures. Okay, break of structure, and also here we have break of structure. Okay, as simple as that. When we are bearish, it's just the opposite of this. Okay, just the opposite of that. Like we are forming lower lows and lower highs. Okay, we're forming lower lows and lower highs. So you will see price creating this, breaking structures to the downside, breaking structures to the downside. Okay, and forming these lower lows, lower low. Okay, lower high, lower low, and lower high. That's how simple it is when it comes to a bearish market. Okay, we have this break of structures, and it is very simple if you actually understand. Just focus on this formation of high highs and high lows, formation of lower lows and lower highs, depending on the direction of the market. So this lower low was taken by this lower high. This lower high is the one that from here we pushed the price to the downside, and we took this previous lower low and we formed this new lower high. Okay, this new lower high. This is what was formed after price did what? After price block structure here. Okay, so that's all about market structure. But also, if we are expecting a reversal in the price action, like this, maybe price was like what we see here, like price was selling. Okay, and then price starts to reverse. Okay, then price did that, and then the price did something like this. Okay, which is actually an indication that the market is showing the strength. As we know, we had this last break of structure before price started to show the strength of buyers. Okay, so this one here is a market structure shift. Okay, this one here is market structure shift, and this one is sell side liquidity. Okay, why? Because when price actually broke this previous lower low, we expected price to continue going down. Okay, we expected price after breaking this lower low, okay, and forming this new lower low, we expected price to go higher, but we didn't. Price is not supposed to break these lower highs when we are bearish, price should not break these lower highs. Never should price break these lower highs if we want to see price in a bearish market. So if we see price breaking this lower high, okay, like what happened here, this shows the indication that sellers are losing control of the market and buyers are actually entering the market. So we expect price to start reversing and going higher. Okay, we expect something like that. Okay, so we expect a reversal, we expect the change in direction, and that's why this is called market structure shift. Like price is shifting from the bearish market to the bullish market. Okay, so we can clearly see this market structure shift. Other people call this change of character. So immediately after we see market structure shift or change of character, we expect price to start showing the what we call, expect price to be bullish. Okay, so something like this, you can expect to see something like this, and then price continue breaking these new highs and forming new highs. Okay, so this point here, this point where I've marked as market structure shift, this is where everything, we need to check this. Okay, after we see something like this market structure shift, this is where we see the indication like price is changing. So when we see market structure shift, we expect to take your trade either on the fair value gap or on the order block or on the fair value gap, which aligns with what, with the breaker block, or what we call the claimed block. Okay, so that's the simple explanation when it comes to market structure. Okay, so we changed direction from selling to buying, and we started printing these high highs and high lows. Okay, these high highs and high lows. Okay, that's what you can see. Yeah, we're talking about when price is reversing, right? Something like that. Okay, so that's market structure shift. When we talk about market structure shift, we are talking about something like that. Okay, very simple details. But when we talk about liquidity, we are talking about the highs and the lows. Okay, just like what I've explained here, like price created the sell side liquidity here. This was sell side liquidity. Why? Because this was like price swept this lower low and didn't respect the higher, the lower high. Okay, price didn't respect this higher low, the not higher low, lower high. Okay, price didn't respect this lower high. So we expected price to respect this lower high if this was going to be our true breakout structure. But price didn't respect this lower high, which means this now was not a true breakout structure, but this was just a liquidity sweep, and price reversed, which shows now we didn't have a true breakout structure down here, but we had sell side liquidity. Okay, which is an indication that the market is expecting to change direction. Okay, so that's it when we talk about a simple explanation about liquidity. But when we talk about liquidity, we're talking about trend lines. We're talking about equal highs and equal lows. Okay, let me show you some simple explanation. Okay, when you're talking about liquidity. Okay, when you're talking about liquidity, you're talking about things like this. You may either see some form of equal highs, something like that, and price always tends to sweep this. So this was the equal high, right? They say this is our equal high. So if we expect the next move to come here and respect this, it's not going to happen like that. Price is going to sweep it and starts reversing. Okay, something like that. So it's going to take out early sellers here before reversing. Because of what? Because of these, what we call equal highs. These equal highs, they are going to act as liquidity. They are liquidity. This is where money is, liquidity pool. Okay, so it can be in form of equal highs. Okay, liquidity can be in form of equal highs. Liquidity can also be in form of equal lows, something like this, or we can say double bottoms. So if you expect price to come and respect here, so let's say this was equal lows or equal double bottom. So somebody may be expecting here price to come and respect this like that, and then reverse, and then go higher. But what happened is that price will just sweep it, and after sweeping that, that's where you're going to see the true move. Okay, that's where you're going to see the true move, which means now this area here was liquidity area. Okay, we had liquidity sweep at that point, so this was not a good point for you to take any entry. Another example is trend lines. Okay, if you see some form of trend lines, price creating these trend lines, Don't always be trapped with these structures. Okay, it's always very dangerous. It is always very dangerous trending these trend lines like that. Okay, someone may be expecting, okay, I'm expecting maybe price will come down here and we will reverse from there, something like that. Somebody may be expecting something like this, like price is going to tap again on this trend line and we're going to go lower. But what's going to happen there is that price will actually use that as a liquidity and it's going to sweep it like this. You see something like this and maybe something like this. Okay, something like this will be formed. You will see that. So price will not go to respect this trend line. So it's going to become a liquidity. Okay, that's why it's very important to consider. So this is the third example of liquidity. The simplest one is always the swing highs and swing lows. We talk about the swing highs and swing lows, the highs and the lows of a range. Okay, that's also one of the examples of what? That's also one of the examples of liquidity. Okay, so let's just check some of the real chart examples on how we can use the concept of market structure and the concept of what? Liquidity. Okay, so let's move these drawings. Let's go to the charts. Let's check the charts. Okay, so here we have, this is GBPUSD and this is higher time frame. Okay, we always look for direction bias on the higher time frame, which is weekly and daily. Okay, so let's check the weekly analysis and check how price is moving. So what we can expect on the next candle to be formed. Okay, so on the weekly, if you can see, we have this weekly fair value gap. Okay, the imbalance on the daily. On the weekly, we have that weekly fair value gap. Okay, so if we have this weekly fair value gap, also this is an indication, right? This is an internal range liquidity. Price just reversed into this internal range liquidity. Okay, and we know like price is coming from sweeping this high here. Okay, price is coming from sweeping that high, which was the external range liquidity. External range liquidity, as you know, in my video I've already explained about internal range liquidity and the external range liquidity, which means price tends to move from external range liquidity to internal range liquidity and also from internal range liquidity to external range liquidity. So right now we have just entered on this internal range liquidity. So what is our target? Our target may be this high or it may be this high. Understand? So these two are going to be our target, our drawn liquidity, our next drawn liquidity. So this one is the first, this is the second. Okay, so let's check on the daily. So now we are bullish on the weekly. Let's check on the daily to confirm our direction bias. So looking on the daily, you can clearly see very simple and nice market structure. This is the daily fair value gap. Okay, so it's the internal range liquidity on the daily, and on the what you call, check our target. This is external range liquidities. Okay, and you can clearly see on the daily we have already started to print this bullish candle, which shows that now price is ready to go higher. So it's just a matter of following the trend right now, because we're already bullish here on this daily candle. So let's go on the 4 hour and try to look for good key levels. Okay, nice key levels for us to put them as our target. So you can clearly see something here. Look at this. Look at this, okay? Look at this here. This is some form of equal highs. That's some form of equal highs. So this is very nice area for us to put as our target. But also apart from that, if you look closely, you can clearly see we have this fair value gap, which was not yet fully filled. Okay, so I have this fair value gap, and most of the time, as I've explained about liquidity, most of the time a fair value gap that has been a little bit filled like here tends to become a liquidity the next time price approach it. Okay, so let's check. Another thing is, let's check the whole price action. Okay, because I can see something like another fair value gap there. You see, we have another fair value gap here. This one. This is another fair value gap. So we have fair value gaps there, and there is this one again. So this is one of the of something that is very important when you are trying to look for directional buyers. Okay, look for where is the market showing a lot of imbalances. So you can see here we have a lot of imbalances, which means price needs to push higher to fill all of this or some of these imbalances. Okay, because here on the upside there is a lot of magnet. Okay, price is going to be attracted to go higher because of these imbalances that needs to be filled. Okay, so it's a very, very good reason for us on the 4-hour to give us more clarity and reason for price to go higher. Even here you can see we have fair value gap. Okay, we have a fair value gap there. You see, so price will have to go higher and fill these imbalances. Okay, so let's check on the 1-hour time frame now, see if we can find any kind of good structure. So you can see here price is already showing the reversal, what you call the market structure shift here. Very beautiful price action. But also before we had market structure shift, look closely here. We had this sell side liquidity, like liquidity sweep. That's a liquidity sweep. Okay, in form of what? Liquidity sweep in form of status sweep. So we have liquidity sweep right there. That's liquidity sweep in form of status sweep. And we have market structure shift here. Okay. Now we are dealing with market structure. Okay, we are coming from liquidity. Now we are dealing with market structure. So market structure shift right there. Okay, so we have market structure shift there. And look closely on what price is creating here. You can see we have this fair value gap, and also we have this fair value gap. So we have two bullish fair value gaps, or we call them the BC. Okay, so we have two. Let me just remove this. Remove those. Have a clean chart. Okay, and so remember that's our target. That's form of equal highs. This two form of equal highs. That's why it's going to be our target. So we have market structure shift here. We have the fair value gap. So we need to focus on the lower one, this one. Why? Because price, when we are looking for buys, we need to focus on the discount level. So we have this. Have this discount level. So if we mark like that, see this one from the green line here, this is where the equilibrium line is, and down here we have, so discount starts from here. Discount level starts from here to here. Okay, that's our discount level. Any fair value gap or an order block which is somewhere here is good for us to look for buys, but anyone this is which is above this 50%, because this is like 50% and this is like 100% of our range, and this is 0%. So from 0 to 50, that's our discount. From 50 to 100, that's our premium level. Okay, so let's continue here. You can see, so now we are not going to consider this, fair value gap, because it is in the premium level and we are looking for buys. Okay, so now again we have this, if you look, we have this IFVG, the inverted fair value gap, giving us more what? It's given us more confirmations, but also we have this bullish order block on the hourly time frame. We have this bullish order block which is below this bullish fair value gap. Very nice point for us to look for trades. Okay, so let's go on the 30 minutes and look for an entry. Okay, so let's look for an entry on this on this bullish order block. Okay, let's just check on the 15 minutes also if you can see any clear reason for us to buy. Okay, 15 minutes, very nice price action here. Okay, so let's go back to the hourly, because I see here we have a very nice, this is where we have a very clean market structure. Okay, very clean market structure here and a lot of confirmations. So let's check what price is going to do. Let's wait and see. So we will have to buy from here, from this order block. Okay, stop loss below this. Okay, below that, below that. NTP, those equal highs there. Okay, so let's execute and see what happens. Okay, there we are triggered. We are in. Let's see if price reaches take profit level. There we go. Nice movements. Movements. There we go. Okay. So you can see this is what happened. Okay, so price action currently learning from here. Okay, we are currently here, and this is where price action is. Okay. So guys, the important thing is that our trade is still learning, still moving in profits, and we need to wait and see if price will actually reach where on this take profit level. Okay, so up there, guys, I think you have seen the importance of using market structure and liquidity in executions. Okay, so I think we need one last example in order to actually know if we can continue, if we can actually use this style of trading, because a lot of people I know they want to see, like, give us more examples. I want to know if we can use the same style of trading on different pair. Okay, so let me show you another. Okay, so this is the second example. This is EURUSD, and this is weekly time frame. Okay, so look on the price action here. We are focusing on the candlesticks. Okay, we are focusing on candle formations. Okay, so if you look easily here, you will see price was pushing higher. If you look on market structure very fast, you can see we were pushing higher, right? So you can see here. So let's check. This is the weekly. You can see we had this very big bullish fair value gap. Okay, but what gave us more strength for us to look for buys was this turtle soup. Okay, turtle soup that was formed here, or what we call CRT low. Okay, those people who trade CRT is just the same thing, just the packaging and stuffs. So you will see here what we had here is turtle soup. Okay, we have turtle soup here, and price entered inside this fair value gap with the turtle soup method. Okay, so this is what gives us more strength for expectation of price to go higher. And this candle range high here, this was our first take profit. Okay, and you can see what happened is price went higher there, and what could have actually become our next direction bias? It was going to be the same bullish scenario. Why? Because I've already explained in one of my daily candlestick masterclass where I talk about the how do we actually understand the directional bias, okay, on the daily and weekly using candles. Okay, just candles. And I said, like, price, if price showed this kind of thing, okay, this, which is what we call the break of structure. Okay, it's a break of structure. Price, if price breaks the previous candle high with the momentum and close above the previous candle high, this is weekly time frame. If price close above the previous week high, like here, this is a new the close of this candle. So if price close above the previous candle high, then we are bullish. So we expect what the next candle also to be bullish. That's why even this was a bullish candle. Okay, so if this was a bullish candle, and right now what we are seeing here is that price is doing this thing. Okay, price is just inside the range. You see, I've already explained this in the daily candle masterclass, one of my videos that has a lot of viewers. You can check on the daily candle masterclass. So here we are focusing on the daily and the weekly. So if price is inside this range, okay, is inside this candle is inside this range, the high, because on the higher time frame, each candle we actually treat it as a range. Okay, the high and the low. Okay, so if you use the concept of CRT, this is the CR low and this is the CRT high. So it means this candle is inside this range, inside this high and the low of this candle, of the previous candle. So it means what we're supposed to ask ourselves is, how do we actually expect the next candle to be? Is it going to be a bullish candle, or is it going to be a bearish candle? Okay, so if we have this kind of scenario where the candle that we are looking at behind it, like if we have the candle like this, and we want to know the next candle, if the next candle is going to be bullish or bearish, what you're supposed to do is we need to follow this previous or the former bias, which was bullish. Okay, the former bias was bullish here. That's why we expected the next candle to be bullish, this one. And it was a bullish candle. So it's truly a bullish candle. But the problem is that it is inside the range. We expected it to actually close above this range. But what happened is price just closed inside this range, which means now we need to actually anticipate the next candle is we need to follow the former buyers, these buyers, which was bullish. Okay. So we need to follow the former buyers, expecting price to also go higher on the current candle that we are going to look for trades. So on the weekly time frame, we are bullish also. Look, this is the weekly, we are bullish. Okay. So on the weekly time frame, we are bullish. So let's go to the daily. So the weekly is bullish. Why? Because we can see the candle which is currently here, which was the last reformed. The last candle which was formed is like ranging inside this candle high and the candle low. So which means we need to follow the former buyers here to know the next candle, which is going to be now bullish because the former buyers was bullish. Okay. So let's check on the daily. Let's check on the daily right there. Okay. Let's check the daily. So this is the daily. Looking on the daily, you can clearly see what happened is price has actually formed this bullish candle. And because we are following the weekly buyers, you know, this candle on the daily, which was last reformed, is also bullish, which shows that price will keep on going higher. Okay. Price will keep on going higher, and this is going to be our target. This one. And looking on the daily here, you can clearly see there is no very clean structure that's going to give you more strength for you to look for buys. Okay, the daily here is not very, what can you say? It's not giving us more confluence like we are going to be bullish. Why? Because of this. Because of this, something like this always gives people worries. Like, now, how can I expect some bullishness here while price here is doing what? While price just showed this kind of turtle soup here. Okay, see that turtle soup. So this is what the problem. Like, should I expect bullishness or should I expect bearishness? Because I already have turtle soup here, and this candle which is formed here is still inside this range of this candle. So price may actually reverse. So how can I actually be sure like it's going to be bullish just by looking on the weekly? I need more confluence. I need more confirmation. So in order to get more confirmations, what we're supposed to do is we need to check the 4 hour to give us more confirmations. Okay, let's check on the 4 hour. So if you check on the 4 hour, now you are going to get what you are supposed to get, which is the confirmation. Looking at this, we have the bullish candle. Okay, the bullish order block. And price actually came down into this bullish order block and mitigated this bullish order block. So on the 4 hour, we are getting more confirmation that we are going to be bullish. Okay, and also you can see it started to move higher. So now we need just to go with the what? With the buyers. So this is now our newly formed order block. Okay, so on the 4 hour, this is our newly formed order block. So let's check on the 1 hour time frame if we can find a good area for us to execute our trade. Okay, so if you check there, you know, that's the final order block. Okay, so we expect the price to come down into this and buy. Okay, we expect the price to come down into this and we'll do it and buy. That's what you are supposed to wait for. Okay, so if you check, let's see if price will come down. Okay, so currently price is right there. We have not yet moved. So this is the current price action. So if you are looking for a trade, okay, if you're looking for a setup, you can go back into your charts and analyze this, wait for price to come down into this. And that's why you're going to take your buy. Okay, so this is the second example of how we can use market structure and liquidity. Okay, very, very nice. So we missed this trade. We missed this one here. Okay, we missed this and price just went high. Okay, so the thing that we need to focus on right now is we need to focus on what? We need to focus on what will happen next. We need to wait for price to come down into this, and then we can take our buy from there. Okay, here. From there. Targeting 1, 2, 3. Okay. Yeah, targeting 1, 2, 3 there. So that's going to be our our next trade. Okay. So I think we need to check one last example. Okay, so this is another example, and this is AUDUSD on the weekly time frame. Okay, looking on the weekly here, you can see we have a very big candle to the downside here. Okay, a very big bearish candle, very big bearish candle to the downside. See, we had that kind of turtle soup there, and then price went down, taking out this low. Okay, so we took this low. This is the sell side liquidity. So we took this low. Now expectation is what? Now we can see we have a very big movement to the downside. So we can say we are bearish on the weekly. Why? Because of this strong bearish movement. Okay, price just went down very fast. But also when we have this kind of big movement to the downside, it's very difficult for us to expect a continuation of price to go down. But looking at this, we can say on the weekly we are bearish. But let's check on the daily. What kind of bias do we have on the daily? Okay. Let's check on the daily. So this is the daily. So if we check on the daily, okay, daily is simply bullish. Okay, now the weekly is bearish, the daily is bullish. Now your contradiction. This is a contradiction, right? So you see now we are bullish on the daily, and you can see we had this continuation example on the daily. Price just closed above the previous day high. So it means this candle closed above the previous candle high. Now we also had this kind of liquidity sweep on this. Okay, so this, the most important thing is this, like we are reacting from this bullish order block on the daily, and we also closed above the previous day candle high. So our next candle we expect it to be bullish because of that simple explanation. Very nice, very, very simple. It's very simple to know the bias here. Okay, because also price took this, sweep with this equal lows. Okay, price took this equal lows here, an indication like the market is going to, we expect price to keep going higher. Okay, so we are bullish on the daily, but the weekly we are bearish. So now we need the 4-hour to confirm our what? Our bias. We need the 4-hour to confirm our bias. Okay, simply the 4-hour is bullish. See the 4-hour order block right there. We have that 4-hour order block. Okay, so we expect price to keep going higher from there. Okay, and our entry is on this order block. Okay, so let's go to the 1 hour and look for entries. Okay, let's check the hourly time frame and look for entries if we can find. So if you look on the hourly, that's not going to be your point of interest. We're going to use this. Okay, only this candle here, which is just like like a cross. Okay, see this is the one that we're going to use as our order block. This one is going to be our order block, this cross here. Why? Because this is just a very good point for us to look for entries, because we had this kind of, this is one of the very important thing we always look for price action. Okay, we have the, on the left we have the intermediate term low, on the right we have the intermediate term, what you can say, not the intermediate, short term low. Okay, on the short term low. Okay, and the intermediate term low here. Okay, and this intermediate term low is the one that you're going to use it as our order block. Okay. Okay, let's wait. Okay, so this is going to be our order block. This one is going to be our order block. So let's delete this. So you can clearly see we had a very good expectation that price is going to come down into this bullish order block, and we're going to buy from there because we are bullish on the daily, we are also bullish on the 4-hour, and right now on the hourly time frame we expect price to come down into this. Okay, and we are going to buy from there. Okay, something is not working here, guys. So let's be patient. Okay, let's be patient and wait for our trade to work out. So this is our hourly bullish order block, and we are expecting to buy from this. Doesn't look like an order block, but it's an order block. Okay, it's a very good point for us to look for buys, and it is the one that is unmitigated. All the other order blocks are mitigated. Okay, that's the only order block that is still unmitigated, and it is in the discount level. Okay, down there on the discount level. So we expect price to come down to this. We expect price to come down there and push higher. Understand? So that's what we are expecting. So if you're going to take a buy, we need to put our entry on that line, that blue line. So cross down there. Our TP should be that. Okay, that's our take profit. Remember this level, that's our take profit. Expecting price to come there. So let's check and see, because already we have very good market structure shift here, very good market structure shift down here, and also market structure shift here, which is not yet. It's a major. So if this one is taken, it becomes a major market structure shift, and it's going to be the reason behind confidence for us to execute. You see, so we already took that major market structure shift now, so it becomes a very good point for us to look forward for buys. And if you look here, I see the very good trend line down there. It's like a trend line. You see this? It's a trend line. Okay, price is creating a trend line. So if you're expecting price to react on this trend line like that and go higher, I think it's going to be a loss. You're going to be in a loss. Okay, you're going to be stop hunted. So let's check there. So you see, if somebody expected some buy, wow, just wow. And that's what happened actually. Liquidity sweep, anybody who was trying to look for a buy here, it was taken out with this week. See that? Zoom it. You see that liquidity sweep, okay? And you can see price. Everybody who was expecting to buy from this trend line here down there, anybody who was expecting, is already out, already taken out of the market, okay? Already out of the market. If you expected to buy from here, you're already out of the market. If you expected to buy from there, you're already out of the what? Out of the market. If you expected to buy from there, from this region here, you're already out of the market. If you pressed your stop loss maybe here, you're already out. If you expected price to actually to actually tap into your entry point, it means you're going to be in a loss, because price did what we call liquidity sweep here, buy side liquidity, and down here sell side liquidity. All of these two have been taken out. So if you were an early trader, okay, you're already out. If you didn't consider the idea of liquidity sweep and you actually maybe expected to buy from here, let's say you expected to buy from here, this was your order block. If you expected to buy from there, you are also out of the market. Why? Because you traded not on the discount level. You didn't look for your order block on the discount level. And also it's because you didn't look at this trend line here. So you are already out. So we can see how we were tapped in. See, this is our trade now. Trade is running in profits. You see, that was the trade. So our TP, we can move our TP. We can either put a TP there, or we can put a TP on that high that was actually formed, the one that caused the buy side liquidity. Okay, let us see what happens if price would hit our take profit. There we are. Okay, take profit hit. Okay, so that's the example again of how we can use the concept of market structure shift and the concept of liquidity. So up to there, guys, I actually think this is enough for today. I think everybody who actually wanted to know about market structure shift and market structure and liquidity now already knows. Okay, it is like that. It's very simple when it comes to understanding market structure shift and liquidity and how to apply it. Remember, trading is not hard. trading is simple. You need to actually make sure you simplify. Focus on reduction. Focus on reducing things on your trading analysis strategy rather than adding things. Okay, that's a very important thing. Okay, focus on becoming a better trader every day. And if you not want to become a better trader every day, you need to actually have a very simple, systematic approach. Okay, but remember, it should not be easy. It has to be simple. You just need to have few rules that you need to follow, and make sure you have already collected data, you have back tested, and you have journaled your trades, so that when you are actually executing, you are confident enough with what you are trading and the amount of money that you are risking. So guys, have a very nice, wonderful day, and thank you for watching this video. But don't forget to subscribe on this YouTube channel. It doesn't cost anything, guys. Just click the button, subscribe, hit on that notification button, and then so that you may become one of those people who will be watching my videos immediately after I post them here on YouTube. So guys, thank you a lot for your time. Thank you a lot. God bless you. Have a nice day.